Hello and welcome to the day ahead. It is Tuesday, March 15th. I'm Andrew Gagan. Let's begin on Wall Street, which began the week with another volatile session ending on the back foot as oil slides. Fresh lockdowns in China put renewed pressure on supply chains and investors eye off the Fed later this week. The tech-heavy Nasdaq led the declines, posting its lowest close since 2020, while the Dow ended relatively flat. The conflict in Ukraine continues to unnerve the markets, with another round of talks yielding little progress as heavy shelling continues in Kiev, as well as Russian attacks on Ukrainian facilities close to the Polish border. It comes amid heightened concern over China's role in aiding the Kremlin, with the US National Security Advisor raising deep concerns over Beijing's alignment. While the White House says it isn't in a position to confirm any intelligence on China's involvement, it said there will be significant consequences if it provides assistance which violates sanctions. In response, US 10-year yields surging to 2.5-year highs, and the US 2-year yields lifting 11 points to 1.86%, the highest since August 2019. The price of oil plunged as much as 8%, briefly breaking below $100 a barrel before recovering as investors weighed up comments of ceasefire talks and the possible impact of weakened demand in China. Brent and WTI have logged their most volatile 30 days since June 2020. Currency-wise, the greenback lower as the market awaits the Fed decision on Thursday, with a 25 basis point hike nearly 100% priced in as the US central bank moves to aggressively tame hot inflation, and the Aussie dollar suffered, losing close to 1.5% of its value. Meanwhile, the European Union is gearing up for more sanctions against Russia's oil majors, but fresh reports this morning that that's as far as it will go, with the bloc stopping short of a total ban as the pressure of rising inflation and the spiking fuel prices weigh on policymakers. And rounding out the overnight session, Tesla chief executive Elon Musk has taken to the Twitter sphere, challenging Vladimir Putin to a duel, saying the stakes are Ukraine. The message prompted an immediate response from the head of Russia's space agency, calling Musk a devil and a wimp. Shares of the company lower in the day's trade after previously saying the company and its SpaceX subsidiary are facing huge inflationary pressures. Looking at the bigger picture, supply chain constraints have come back into firm focus as fresh outbreaks of COVID in China are leading to more lockdowns, with a northeastern province imposing a travel ban due to the spread of Omicron. The White House responding, saying it is monitoring any supply chain impacts on ports in the region. Today at home, consumer confidence and property prices data released, and the RBA issues its board meeting minutes from its March 1st meeting. The Aussie dollar in focus, continuing to slide below that 71-cent handle. Elsewhere, we'll get Chinese retail sales, production and investment data. And tonight, a further read on the US economy, ahead of the crucial Fed meeting, with US producer prices and Empire State manufacturing data. So here at home, we are looking at a negative opening, with SPI futures currently off 0.85%. Commodities high on the watch list at home as the COVID resurgence in China sends Dalian iron ore futures sliding 7%, with fresh curbs dimming the growth outlook. In the soft space, palladium got wagged, falling more than 16% to sit just above $2,360 an ounce, and demand concerns in China also weighing on aluminium, which fell by 5%. Tin also lower. The gold futures price falling by just over 1% to sit at $1,960 an ounce. And the local market more broadly continues to remain resilient, with the upcoming Fed rate hike giving financials a big enough boost to offset falls in energy plays.
In oil prices in particular pulling back during the Asian session. So that's led a bit more optimism to the market. And of course, a lot of that is around what's happening in China at the moment, that we've seen a lockdown of a major city and the possibility of more as they continue on with that COVID zero strategy. So we are seeing not only oil prices being impacted, but of course things like iron ore also being impacted today. So the miners under a bit of pressure today. In fact, the materials, the energy, the worst performing areas. But on the flip side, we have an interest rate meeting over in the US this week. So very much an interest rate hike that's already being baked in, 25 basis points, really helping the financial space. We're seeing stocks like Net Wealth as well as Hub24, which have I guess, big cash balances sort of sitting there in Computershare and that benefit from rising interest rates doing well. We're seeing QBE insurance doing well, up by about 2.5%. And of course, the big four banks also gaining ground.
That is your day ahead. See you again tomorrow.